Hi, this is Jason, and in today's video, what I want to do is do a fun comparison and ask the question, what is more correlated? Celsius Network CEL token against Bitcoin or CEL against Ethereum? Now, this is quite an interesting question because we know that Celsius Network's AUM is largely dominated by Bitcoin and Ethereum, with Bitcoin having the lion's share. So before we go into the empirical evidence, let's just define the metric we're looking at. So we'll be looking at the correlation coefficient, and this is essentially a metric that's calculated between a pair of cryptocurrencies. So CEL against Bitcoin or CEL against Ethereum. And this figure can range between -1 and +1. And what this means is +1 means they're very strongly positively correlated. So if, for instance, Bitcoin goes up X%, then CEL goes up X%. Whilst a -1 figure essentially means that if Bitcoin goes up X%, then CEL will go down X%. So a positive number, i.e. 1, means they're very strongly positively correlated, whilst a correlation coefficient of -1 means they're strongly negatively correlated. And a figure of around 0 basically shows no evidence of correlation either direction, i.e. Similar to being independent, essentially. So let's have a look at the data. This has been extracted from TradingView, and I've extracted the period of October 2020 to middle of March 2021. And the area here is essentially the price, the daily price of CEL token. And you can see the daily price by this axis. So for instance, at the start of October, we see around a $1 CEL, and then $2 CEL in around towards the end of November, and then peaking at above $6 in the start of 2021. And with these line charts here, these are the correlation coefficients calculated. So the blue one here shows CEL against BTC, whilst the green one here shows CEL against Ethereum. And we can see the correlation coefficient highlighted here. What's worth noting is these correlation coefficients are based on a 21-day moving average. So what this means is on the 1st of October, the correlation coefficient is based on the previous 21 days averaged out. So the reason for doing this is because 21-day moving average essentially reduces the volatility or the noise in the data, whilst 21-day is a weekly metric, so it's 3 weeks. So working in a weekly basis for the correlation coefficient also removes the perhaps bias due to seasonality. But overall, 21-day is a good level to look at without removing too much detail, but at the same time, removing some of the noise and having a clearer picture and conclusion. So just bear that in mind. Whilst the price of CEL, this series here, is based on dailies, these metrics on each day are based on a moving average window of 21 days, which is 3 weeks. So what we can see here in general, if we just look at the CEL to BTC versus CEL to Ethereum, we generally see BTC being more correlated, again up here and then up here, staying above ETH, and then again staying above ETH. There's a moment where Bitcoin is less correlated to CEL compared to Ethereum here, and then it returns here. So overall, I'd say there's a general higher correlation of CEL and BTC over CEL and Ethereum. What's interesting to note is Ethereum here seems to decouple from CEL. And the reason for this, in my opinion, is we know that around this period we had the initial stage of the ETH 2.0 staking. So I believe that was early December, and there was a countdown window for the staking requirement to be put through. So as that timeline came closer and closer, and also subsequently after that timeline closed, ETH premium moved up significantly. So hence why Bitcoin is more correlated to CEL, because Ethereum was just going on its own trajectory. And then towards the end of December and moving into January, this correlation comes back. But then again, in the middle of January, there's this decoupling again with Ethereum. And then what we see here really from mid January onwards, we see a reduction in correlation in both Bitcoin and Ethereum against CEL. And then only recently this has recovered in the case of Bitcoin, whilst Ethereum still remains fairly uncorrelated with CEL. So overall, I think the general story is Bitcoin is generally more correlated with CEL rather than Ethereum. And if we look at a monthly basis, so this is basically aggregated results on a monthly basis just to cut out further the noise. And we can see here that quite consistently, well, pretty much consistently, CEL is more correlated with Bitcoin than it is with Ethereum, because we can see it is consistently above Ethereum. And what's interesting is the divergence. So the level between these two lines is fairly consistent in October, November, but starts to diverge in December and January. But what's interesting in February 2021 is the correlation is pretty much zero for both Bitcoin and Ethereum against CEL. And that could possibly be because we know that CEL has plateaued somewhat since January, whilst Ethereum and Bitcoin have continued to increase in price, hitting to all-time highs actually. And then in March, we do see a recovery in the correlation. And part of that could be due to both Bitcoin and Ethereum kind of consolidating a bit, because they've had quite a bit of a rally, and they're on the verge of breaking all-time highs again. So perhaps that consolidation coincides more with what's been happening with CEL in the last quarter, essentially, which is consolidation. So yeah, doesn't imply too much. I think it's just an interesting observation, and obviously it is all relative. So it is just comparing Bitcoin against Ethereum on their correlation with CEL.